would I sell my stocks in a down market?
I'm Nate, the FitFutureMD. Upload every Monday, Wednesday, Friday. Make sure you like, comment, and subscribe for more.
So 2022 was a rough year in the stock market for most people, right? And they're calling for more pain in 2023. The question is, why was 2022 a rough year for you? And am I going to sell my stocks in a down market, right? So first of all, you have to assess, what are your investing strategies, right? Do you have a short-term, medium-term, long-term investment strategy? Do you have a combination of all three? I personally do a combination of all three, right? So I have things that, I invest in, or are you doing a wealth preservation strategy? Are you trying to grow your wealth? Are you doing a flip strategy? What's your strategy when going into this, right? So you have to kind of assess that, right? So say you were invested in Exxon this year, right? But you were also invested in Tesla. Well, Tesla's down like 60% this year, and Exxon's up like 80, right? So you really, if you don't sell anything, then you have no realized capital gain. Exxon's going to continue to make money, and so is Tesla, right? Tesla's not losing any money anytime soon. But if you wanted to realize those gains on Exxon, because you believe Exxon's going to go down in 2023, you could sell your Exxon stock and then offset those gains by selling your Tesla stock for 30 days. That's called tax loss harvesting, right? And you take the same money and you buy back into Tesla later, and you realize you take the money that you made on Exxon, and you keep that, and you buy back into Exxon with the original investment, right? However much that was. But, this is basically what mutual fund managers do. This is what ETF managers, hedge fund managers do, right? That's kind of what you pay them to do, right? You pay them to figure out when is the time to sell, when is the time to buy, all that kind of stuff. I personally don't use those types of people. For me, if you have a wealth preservation strategy, then you don't want to be paying taxes every time you have a profit, right? So that's what ETFs are for, right? So you invested in VOO, VTI, Spider, whatever. That's for wealth preservation, right? To make sure that your wealth continues to grow and stay the same over time, right? So that when you retire, you're basically making the same income from your investments and you not having to work, right? That's wealth preservation. Whereas a wealth growth strategy is more of a short to medium term strategy where you're picking things that, if they get a big contract, they go up, and they go up big percentages, 20, 30, 50%, even 1,000%. I've seen healthcare stocks that have, their drug in phase 2 trials, and they're sitting at 75 cents to $1, and then all of a sudden they're $12, $13 because they made it through phase 3 trials and their drug is going to market. Pfizer is going to buy them, whatever. So that's a wealth growth strategy, right? So I'm taking my $1,000, putting it in that, and if that stuff goes through, then I go from 1,000 to, say it goes up from $1 to $2. I go from 1,000 to 2,000. So I made $1,000 quick, fast. Say it goes to $10. So you made $10,000 off $1,000 bet. If it doesn't make it through, yours goes to zero, right? So that's a different strategy, and you do that with money that you can afford to lose, right? Whereas the long-term strategy and the wealth preservation strategy, you're doing it with what is considered less risky things, but honestly, every company can have a downturn, right? Just look at Tesla. Like, Tesla looks like it should be the first, $10 trillion company. They're in everything. They got AI going. They got, electric vehicles going, full automated driving. Like, they literally should be, their tech is way above everybody else, right? But at the end of the day, things affect that stock price other than the fundamentals, right? Or they were so overvalued based on that technology that everybody's catching up with now, or based on government funding or whatever. I think everybody that invested at the end of 2021 into Tesla definitely thought that Tesla was going to go up in 2022, and it ended up going down 60%. So you lose half your money on things that are considered solid bets too, right? So, but the biggest thing is, do you sell it? Like the question here is, in the down market, do you sell? So if you had Tesla, you're down 60%, do you sell? It depends, right? Like, do I need a tax loss harvest somewhere? If I don't need a tax loss harvest, do I believe Tesla is going to go back to where it was? Or just Tesla as an example. Is there a competitor, to me, is there a competitor that's going to get up to Tesla, meet Tesla, beat Tesla, right? Can I get into a company that maybe has that younger, more fired up entrepreneur, because, Elon's getting into his 50s, right? And as most people know, like, inventions are made by youth most of the time, right? Like Bill Gates, Zuckerberg, all these people, they made their inventions in their youth, right? Whereas someone like a stock like Johnson & Johnson, they wait for somebody to invent something and then they buy it from them, right? That's their investment strategy, right? So, that's why Johnson & Johnson is considered such a safe stock, right? Is because it's going to continue to give you money, and when people have new inventions, they're going to take their money and buy it, and then make money off that in perpetuity, right? So selling your stocks in a down market, it depends, right? If you can't find that competitor to Tesla that you think will overtake Tesla, then you might average down on Tesla, right? You might, so say you had $10,000 of Tesla stock, you might do another 10, right? And average your average down. So when it goes back, so say, I don't know what Tesla is trading at, $100, just say it's $100, right? And, you bought in at 300, well, you average down, and then your average is at 200 if you buy the same amount. So then when it goes back to 200, you're back to even, right? But you could also lose that 10 as well, right? Tesla could go to zero. Tesla could be just beaten by a competitor. Like, that's the risk you take when you invest, right? But the idea with investing is there's only 24 hours in a day for you to do work, right? What investing allows you to do is leverage other people's work so that you make money off of their labor, right? That's leverage. That's capitalism, right? But would I sell my stock in a down market? It depends. If I'm trying to cover up some gains, I would tax loss harvest. Like I say, my short-term strategy is to find things that I believe will disrupt the market, like a Helion, like a SoFi, like a Fubo, like a I'm basically looking for Tesla before it was Tesla, right? I'm looking for a Netflix before it was Netflix. I'm looking for Shopify before it was Shopify, right? I'm looking for PayPal before it was PayPal, right? I'm looking to grow my wealth growth strategy, but I'm only risking the money that I can afford to lose on that. So just say you were going to spend $10,000 on a vacation this year. Instead of going on that vacation, I'm going to take that, or I'm going to half that money. So I'm going to say, oh, I'm going to drop my vacation money to $5,000, and I'm going to take the other $5,000 that I can afford to risk because I was going to spend it anyway, and I'm going to find some things that are going to 1,000x, right? I'm looking for that original Tesla stock that went from $8 to over $2,000, right? At its peak. Like, it's crazy, and it's split, and now it's dropped 60% or whatever, but that's what I'm looking for. I'm looking for that 10-year run, right? And if you do, so say you did 5,000 for 10 years, that's 50K, and $1,000 each, so that's 5 chances a year, right? So 25 chances. Do you think you'll get it right once? If you get it right once, man, all you have to do is get it right once. And there's people that spend more than $5,000 on lottery tickets every year. When I was in college, I smoked $1,800 in cigarettes every year. So much money wasted when could have been doing this and taking chances on Tesla, on Amazon, on Netflix, like back in the day. And if you had done that, you'd be a millionaire already, right? So we're going to do that now. We're going to do it into this down market. Like, we're going to try to get things that should be $150 stocks for pennies on the dollar, and we're going to get rich. So would I sell my stocks in a down market? Absolutely, if I thought that there was a benefit to it. I'm Nate, the Fit Future MD. Comment and subscribe, and we'll see you in the next one. Peace.